Good afternoon, ladies and gentlemen. Quality research is what differentiates the has-been portfolios from long-term multi-baggers which create immense wealth for you. Especially research matters when there are major events in the market and you are trying to find out where quality exists at a reasonable price. And talking about events, there have been three major ones as far as the Indian markets are concerned. We had the budget on 1st of February, followed by the all-important Indo-US trade deal, and of course before that the Indo-US EU trade deal. So a lot has happened which has created significant churn across the Lal Street. Where would you be pointing your fingers in terms of getting quality stocks at reasonable prices? No other person than Mr. Devarsh Vakil, Head of Prime Research at HDFC Securities, can tell you. A very warm welcome to you, Devarsh ji, and a very happy new year. We are meeting for the first time on air post the beginning of 2026. So greetings. Tell us, how are you watching the market after this one major sword has been removed from the neck of the Lal Street, which is the Indo-US trade deal, and then we'll discuss the budget.
Sure. So, pleasure to be here, Shail. It's always pleasure to interact with you and the viewers of our channel. As you said, there was a major overhang on our market, not specifically because we have a very large trade with US. In fact, we have about 20% of our goods exports to US, but it matters from the sentiment perspective. It matters from the trade and the portfolio flows perspective. So since this deal is done, I think the structural selling which we used to see from FIs, that overhang is now over. And that was not only because of the trade numbers. See, the FIs also, the rupee depreciation matter. And I think because of this, the depreciating rupee, that now we have put a floor to it. So the FIs who were not putting money into India, I think now stock specific, sector specific, whenever the opportunities arise, there will be flows back into India. So the gone are the days where we are showing continuously day after day negative flows from the FIs. I think now we will see numbers turning positive also for a few days. So that is very important, apart from the direct impact on our various stocks and sectors from the trade deal. Trade deal is obviously quite positive for our goods exports. Obviously, the labor-intensive sectors which were directly impacted, with textile, gems and jewelry, and leather, and all those export-related areas, auto ancillary, are the clear beneficiary. And I think that must have been discussed on the channel.
Right. This is an interesting point that you make, Mr. Vakil, that you will see not only a pause in FII selling, it would also mean some fresh money coming in. Because of this US trade deal, there was this massive overhang on the rupee. Do you think the worst is behind us as far as the currency is concerned, at least for 2026 or maybe the coming 3 months?
Yes, I think so. So, why rupee matters for the flows, as you know, see, last year we had about 10% around 8 to 9% rise in Nifty and larger indices for Indian investors. But most of that were washed away for the FIs because rupee depreciated by almost 5 to 6%. So yes, for taking 5% return, I don't think FIs will invest into India, and that overhang was there on the Indian markets. Now, why I feel that the rupee will make a bottom or will not be depreciating as much, because our overhang on the export side is over. Other thing is that now we are going to see a transition in the US Fed governor. One of the reasons why the current gentleman has been chosen is that President Donald Trump firmly believes that the US interest rate should head lower. So come mid-May, we will see new Fed governor taking over, and I'm expecting about 1% interest rate cut in US. And when the interest rates move lower in US, I think there will be some pressure there on the dollar, and dollar index is continuously going down. So that should also help a lot of emerging currencies, and especially Indian currency, which has depreciated. From theoretical perspective, when we see it from RWR, trade adjusted rupee values, I think it is undervalued. So I think at this level, I am not expecting rupee to depreciate much further, and that means the portfolio flows which were not coming into India in fear of higher currency depreciation, that should start, and that means we should see some positive flows into our country.
Okay. Interestingly, you mentioned REAR, which is the real effective economic exchange rate for the rupee. This is something that's been bothering our markets for the last 8 months or so. So, according to you, we are fairly close to REAR and possibly even undervalued. Fair point. Now, let's do some good sector picking as also stock picking. Ladies and gentlemen, I'd like to inform you about Mr. Vakil. About 6 months ago, both of us were at a common event in Mumbai, and Mr. Vakil made a very wonderful call right at the bottom of the system when small finance banks were traded at a very, very cheap multiple and after massive price contraction. I'll request the PCR to kindly fire the long-term chart of Ujjivan Small Finance Bank and other small finance banks for you to see what a wonderful rally has happened so far. Amongst structural changes, look at this. Even if you start from Diwali onwards, you'll see at least a 50% rally on Ujjivan Small. So this was one of his picks, and it's done phenomenally well. What could be strong sectoral plays, Mr. Vakil, from now on? Given the tailwinds are now behind us, we've had a massive contraction in stock prices, mean reversion favors us in Asian markets, and of course these three large tailwinds in the form of EU, US and the budget.
Right. So, Shall we have been recommending that 30-40% of the portfolio should be towards BFSI. There are other sectors like auto and others which should be there in the portfolio. We continue to like them, but the differentiated call, apart from metal, auto ancillary, BFSI and others, I think now it is time to allocate to some sectors which are like beneficiary of the structural growth, cyclical growth, which we are going to see post the budget. I think it is time, the price and the valuation is attractive to allocate towards cement as a sector. So that's where we are going to look at it. And obviously the road construction companies where we find extremely mouth-watering valuation. So if you were to take a call that these are the stocks which were not there in the portfolio, and I think we look to add new stocks, apart from the regular usual suspects like BFSI, cement, BFSI, defense, auto ancillary or telecom, which we were favoring. I think now it is time to look at cement and road construction companies.
Okay. I understand the road construction part. I'll request you to kindly name the top road construction company which comes at the top of your mind post Q3 earnings, and of course via your research team.
So we recently came out with a report on and recommended the KNR Construction as one of the companies where you can have a look at it. It has seen a massive fall, and the reasons were there. See, NHAI ordering and tendering was very weak. They had certain debt overhang, which they have now done the deal with the Cube Highways and monetized some of those assets. So money is coming in, and obviously government has allocated certain higher allocation towards the road ministry. So I'm expecting NHAI to start tendering, because continuously 2 years, I don't think that the tendering will be much below the market expectation. The country needs infrastructure and roads. So next year I'm expecting above normal road tendering, and that's where large players and players with a good balance sheet should benefit. KNR should be one of the beneficiaries, and that's why we have recently issued an investment idea on KNR Construction.
KNR Constructions, I'll request the PCR to kindly show the long-term chart of KNR Construction. You'll see a price of about 400 rupees that was there in September of 2024. Remember, this is 410 in July of 2024. Is there something before that as well? No, that was the peak. So from 410, ladies and gentlemen, you have a stock trading at 156 rupees as we speak, 153 so to say. A very nice two-thirds correction that has happened. So this is the mean reversion that we often talk about markets to buy quality assets when they are trading at dirt cheap valuations. And this is where, the expertise of Mr. Vakil lies. So keep an eye out on KNR Constructions as far as the medium-term stock price is concerned. Market capitalization is 4,300 crores. Revenue is 3,800 crores on a trailing 12-month basis. So fairly decently priced at this point of time. 3-year return on KNR is minus 15%. So that's the swing that we are looking at. Mr. Vakil, any other stock, in particular NCC, that catches your attention in the road space?
Yeah, there are others. Shall I stick to what we have recently released? But there are many companies which are there, and this is a more of a sectoral call. So all the players are likely to receive their fair share of orders, and across the board, we should see much better days than what they have seen in last 15 to 18 months.
Okay, fair point. So this again is NCC. This is India's largest, second largest construction giant. And if you compare the market capitalization of this profit-making company to its sales, you will see a massive yawing gap that should, maybe bridged. Who knows? But that's how you find out quality assets. So road transport is there. You mentioned cement in particular. Ultratech Cement is already at a record high. What space in cement are you looking at? Mr. Vakil, one thing that happened in the cement space over the last 4 years was excessive consolidation. Two, fresh capacity coming in, therefore it capped prices. So only the big got bigger. So where is your eye at the moment when you look at the cement space?
Right. So as you said, there was a consolidation in the sector, but there were also less capacity utilization. So rather than keeping the benefits with them, most of the players, when the margins were better, they chose to pass on to those customers, and the prices were not rising. Now, I think the margins and the prices should go higher. The sales volume are likely to go about 8 to 10%. As we have seen the budget numbers, there should be good allocation towards infrastructure building, and that should help. Potentially fuel cost also should come down by 5 to 10%, and that benefit should accrue to the companies. The beneficiaries obviously is across the board. This is more of a broad sectoral call, and as you said, Ultratech is the market leader. One stock which is available attractively recently, and because of the various sector related or the group related issues, I think Ambuja Cement is available at an attractive valuation. That's where we have recently asked our investors, post the recent fall in Adani related issues, stock did came down to attractive valuation, and that's where we have recommended that investors can look at this with about 700 as one of the short medium term price target for cement apart from Ultratech. So that's where, if you are long term investor, gradually you should accumulate Ambuja apart from Ultratech.
Okay. That's an interesting thought that you mentioned. Yes, valuations have already been attractive. Mr. Vakil, not many people realize that, it's available at 6 rupees a kilo. Perhaps the cheapest commodity ever on Indian markets is cement. People are running after aluminium, copper, zinc, gold, silver, of course. But in the world of commodities, nobody is paying any attention to cement. Perhaps it requires a lot of love from fund managers, from strategists such as you. So Ambuja and Ultratech. Yeah. Tell me.
And cement is not a commodity which you can easily import or transport from one location to another location. So there is no risk of dumping from any other region back into your region. So that is also one more important point, that you have to produce within the vicinity of your consumption. And you cannot have a China or some other country dumping this commodity into your markets. So that is also one should remember.
बस वो कहते हैं ना, कुछ ऊपर से नक्षत्र घूमे, स्पॉटलाइट पड़े तो लोगों को पता चले 5 साल से सीमेंट में किसी ने कुछ नहीं कमाया.
That's where the opportunity lies, right? See,
Yes, correct.
there are different strategies. So right now in this show, we are discussing obviously the value buys, the stocks where we are expecting mean reversion. Obviously, there are people are more oriented towards momentum buying and breakouts right now. But these are the areas where if you are patient and if you accumulate for
Correct.
next 6 months, over the next 12 months, 6 months, you should get decent returns.
Fair point. Now, let's look at spaces where you find value. Is IT among them? Of course, today's been a carnage on many IT stocks, but overall, IT was just coming up on long-term charts, but somehow such is the bad luck that it just keeps on getting worse and worse for the IT index. How are you looking at this space at HDFC Securities?
So we are not overweight or underweight. We are fully market weight here. One point which I would like to say is that all these large IT companies may not have much more downside left after the today's fall because these are the places where the balance sheet is flowing with extra cash. So these companies are likely to announce buybacks post these changes in the rules as the rules have now come into favor of buyback. So I see that though top line growth and order wins are not there because and there is always disruption and risk about the higher top line growth, but I don't think there is much downside left in these stocks because at lower levels, I'm sure these companies would like to utilize the cash they have and announce buybacks at lower levels. So depending upon the availability and obviously regulatory approvals, allowance of the regulatory rules because you cannot just announce buyback within a year of your previous buybacks. But I think there are opportunities in the IT sector at lower levels. We should allocate towards it. I don't see much downside from valuation perspective as well as the possibility of buybacks at lower levels.
Okay, so we've discussed in terms of positive mean reversion, the road construction space and cement. IT you are normally weighed. I'm sure banks and NBFCs are overweight, but those are breakout areas where chances of making decent money are slim. Where else does positive mean reversion lie?
So capital goods and engineering have been struggling there. I think stocks like Larsen should also be looked at. We, in fact, a couple of months back, 2 months back, we have been recommending that, and that is doing well. They have not at all-time highs. These stocks can continue to move to all-time highs and beyond. So that's where also one should allocate towards the in portfolio. FMCG has also not done well. Maybe in next 1 month or so, we expect there also opportunities will be there. Areas where one should be cautious, I think, Shail, we should also discuss that. Hospitals as a space, I'm turning a little cautious. They have done a wonderful, they have a huge run. They have a decent run in last 2 3 years, and we have been overweight those stocks. I think time has come to take money off those sectors and allocate towards road construction and other areas which I mentioned.
I totally agree. I'll request the PCR. Yes, you see the 1 year return on Apollo Hospitals. If you see the 5 year return here, it will be in excess of 300%. Narayan Hridayalaya 1 year return is 30%. Many of these stocks have turned multi-baggers over the last 4-5 years. Secular rise in average revenue per operated bed plus expansion plus move towards quality healthcare is what has seen a massive multi-bagging return as far as CMAX Healthcare. It's up 4x, 5x actually in the last 5 odd years or so. So money moving away from healthcare is what is expected towards cement, towards maybe road transport. Mr. Vakil, how are you looking at the auto space post the GST cut? Of course, massive wealth has been created from 16th of August onwards till the budget as far as this tailwind is concerned. But what now?
So, industry momentum is there and it will continue to be supported by new launches. Domestic growth has seen in January month only, I think 12.5% YY growth overall in PVs. Two-wheelers saw massive 30% growth, 27% growth were available in was witnessed in CVs. So I think formidable growth has come in post GST cut and cyclical upturn. We continue to remain bullish there. TVS Motors, M&M, in fact, auto ancillary companies like who has also exposure towards defense, Bharat Forge have been our list of recommended stocks, and we continue to like that.
Okay. Where else do you think? Let me just reframe the question. What would be your top pick in the mid cap banking space?
So in mid-cap banking, we have been bullish, Shell. Some of the stocks, apart from the larger ones, we had recommended couple of PSU mid-cap banks and stocks like Tamil Nadu Mercantile Bank, where there was no coverage, and we were one of the first few to come out with a recommendation, Karnataka Bank. So those, apart from the PSU mid-cap banks, Indian Bank, Bank of India, we continue to favor them. But most of the targets which we had towards these are already achieved. That's why I'm not recommending them again as a fresh buys. One of the reasons where there is still some room is also the telecom space. Obviously, Bharti Hexacom has done well, and I think they will continue to do well over the next 1 year. The story of rise in the ARPU is still not over. They will continue to benefit from them as well as benefit from the subscribers moving from 2G, 3G to 4G and 5G. So that trend will continue to do well. We have recently covered Indus Tower also as one of the picks from telecom. So maybe investors who do not have allocation towards telecom can look at these ideas as well for the long-term investments.
There is this government-led move to ease the AGR pressure on the telecom sector. Of course, Bharti has run up sharply. You mentioned Hexacom as well. One of those stocks which we really don't talk about is you mentioned Indus Towers. What exactly do you like there?
So there is a move towards fiberization. These small towers are going to be in favor when we move from 4G to 5G. Other thing is the overhang was there that Vodafone may survive, may not survive, and this is one of the second largest business area for them. The recent moves makes us believe that if Vodafone were to survive, then a lot of dues which were not coming has started coming in, and I think Indus is available at a fairly attractive valuation. Markets derated it because it also diversified geographically from India into Africa along with Bharti. But I think that's where also opportunity lies. A strong balance sheet company, they should always look for new areas of growth. And I think Africa could be also one more area where they can do reasonably well along with Bharti over the next 1 or 2 years. So that's why we have recommended at lower levels about 1 month, 2 months back, investment into companies like Industan.
Okay, fair point. Time gets pricier and pricier, Vakil साहब. मेरे को बताइए your top 5 ideas irrespective of market cap orientation. We've discussed many of them, but let's just create a list in our mind and then take it forward. So amongst choices, let's look at them. We'll start with the top one. Your choice.
Well, I'll divide the list into 2 parts. One is the large cap, mega caps, which should be part of the portfolio, and some mid cap, small cap 5 stocks. And these are not the only stocks which I am recommending. These are the one which come into my mind on the top of the mind since the last few 20 minutes discussion we had. I'm not having a complete list in front of me, but just top of the mind. Let's see, we can allocate towards Reliance, Bharti, L&T, maybe one of the banks like SBI. These are the ideas which we have been recommending, and I think we can continue to have allocation towards these. So these are the large cap, mega caps which comes to my mind, and obviously Hindalco or Tata Steel, one of the. So that makes the list to 5. And then mid cap, small cap stocks which we recommended, and new allocations maybe Indus Tower, KNR Construction. That's what we discussed during the show. Ambuja Cement. These are the three, four ideas. One of the banks from mid cap and small cap. These are the areas where you can allocate towards small or mid cap and small cap. So that should make a nice list of 8-10 stacks where you can allocate and diversify your risk and hope to earn above average returns.
Okay, fair point. That's a very sensible list that we've come across, Mr. Vakil. Now, my final question to you is, you haven't spoken a word on defense. Why is it so?
So, in fact, Shell, we have been recommending defense earlier also. 2-3 years, it has given us huge returns. It is not that we are basically price sensitive, valuation sensitive investors. So we do have call on stocks like GRSC, BEL, BML, which have done well, and we continue to like them. There is also fairly good allocation from the budget towards that. So I don't expect them to derate or come down. But when we are discussing, I think I will wait for these stocks to come down a little bit before allocating fresh capital to it. But if you happen to have these stocks as a part of your portfolio, then I think continue to hold them. This is not a 6 months or a 1 year story. I think the way geopolitics are stacked up, these companies are likely to do well. And in fact, with the European deal, I think Indian companies can become one of the exporters to Europe gradually and become a large player also. So Bharat Forge or PSU companies like GRSC, BEL, BML should be there as a part of your defense allocation for a longer term.
Okay. And my final question, Mr. Vakil, was this opportunity within the budget on the rare earth space. The government has isolated some land tracts on the coastal side for rare earth metals to be mined. How long will, before this, word converts to reality? And should that happen fairly quickly? What are the 1 or 2 stocks that you think would make sense?
So they do make sense over a 3 to 5 years perspective. Okay. Nothing is going to come into immediate earnings. See, Shell, we discussed, I think, 2-3 years back, the kind of supply crunch we were seeing in the copper. It took 2 years for that call to play out. Similarly, yes. Now that companies will start investing, it will not be anything less than 3 years before we see some actual earnings on the ground. GMDC, NMDC, these are the companies which will eventually get benefit out of the government's policies, and there are others also which will come out. But I think there will be time where we will allocate to them. I don't think we should do it right up.
Fair point. On that very cautious note, Mr. Vakil, it's always a pleasure, sir. Let's hope we meet quickly and discuss quality assets. Thank you so much for your time and have a nice day.
Yeah, pleasure is all mine, Shell. Too happy to interact with you and your viewers. Right. Thank you for inviting.
You very much. Yes. That, ladies and gentlemen, was Mr. Devarsh Vakil, a very well-known stock picker who looks for margin of safety, who looks for value, and of course provides a very keen insight into the markets. Thank you for watching. There's more and more happening on Business Today Television. Please stay tuned.